Establishing and maintaining a good credit score can make a major difference in your life. Sure, you can get by with a bad credit score, but it could cost you. With a healthy credit rating, more financial options open up to you. You'll be able to save money because a good credit score will help you access better deals with banks and financial institutions. If you never thought that your credit score was important, then it's time to change your mind. Here are 8 of the main reasons why having a strong credit score matters. 1. Lower credit card and loan interest rates, or APR. Having a good credit score will help you get lower interest rates if you ever needed to borrow money. Interest rates have an enormous impact on your ability to pay off debt, so being able to access low rates could help you achieve financial freedom far more easily. When you borrow money, the interest rate you get is often linked to your credit score. The better your credit score, the better your interest rate will be. And with a better interest rate, you'll spend less money on monthly loan repayments. With a lower interest rate, it'll be easier and faster to pay off your debts. 2. Credit card and loan approval. If you're going to apply for a new credit card or loan, you'll want to have a good credit score. Your credit score reflects how you're able to manage debt. Lenders look at your credit score to determine how risky you are to lend to. It's important to remember that each lender has its own specific criteria. A good credit score is always an important factor. Having a good credit score won't guarantee that your loan will be approved. Other factors, like your income and current debt, are also considered. However, the better your credit score is, the more likely your chances of approval will be if all other factors are equal. 3. Better chances of higher limit approval. How much credit you're able to borrow is mainly dependent on your income and your credit score. If you have a great credit score, banks can see that you manage your finances responsibly. If you show that you can pay back your debt on time, you'll give lenders more reason to offer you a higher limit. Demonstrating this good credit management gives lenders more reason to offer you a higher limit. So, with a good credit score, you should have a much better chance of being able to borrow more money. A bad credit score is a red flag for lenders, who will be more cautious to trust you with debt. 4. Greater negotiating power. A strong credit score makes you a more attractive candidate for creditors. A good credit score means you are less risky to lend to, so it will give you more power when you want to take out a new line of credit. You will have more leverage to negotiate better interest rates and payment terms on a new credit card or loan. Creditors will be more flexible to those with good credit scores, because a good credit score shows that you can handle debt more easily. This gives you room to bargain. This could help you get the best possible deal. Another factor in this is that people with a good credit score will be more likely to receive multiple credit card and loan offers. You could show these offers to potential creditors and use them as a tool for bargaining. 5. Helps with rental approval. Some landlords consider credit scores an important part of their tenant screening process. If you have a low credit score, it's an indicator that you're not necessarily in the best position to handle regular monthly payments. For a landlord, this isn't a good sign. A good credit record shows that you're in a stable financial position and that you're able to make monthly payments on time. This is what landlords want to see. It can be a big factor to help you get rental approval. 6. Get approved for better insurance rates. When you apply for insurance, many companies look at your credit score as a factor to determine your insurance risk profile. People with low credit scores might show greater risk to insurance companies, so they are often offered higher insurance premiums in return. If you have a perfect credit score attached to your name, your insurance risk report might be lower. This means many insurance companies could offer you lower premiums. This applies to car insurance, household insurance, health insurance, and anything else we're expected to make monthly payments. 7. Lower or no deposits. Whether you're taking out a cell phone contract or a mortgage on a house, your credit score plays a big role in determining what kind of payment plan you're eligible for. With a low credit score, you might be required to pay a large deposit with higher interest rates. With a great credit score, lenders might let you avoid the deposit completely. This is because you've already demonstrated good financial behavior, so you show less risk towards your repayments. 8. Achieve greater financial freedom. Finally, a good credit score is something to be proud of. Even if you're not planning on taking out a new line of credit anytime soon, you'll feel more secure knowing that your finances are looking good. Maintaining a good credit score gives you more power in many different situations. Once you're on track with your credit score, just carry on doing what you're doing and keep your score positive. You never know when a good credit score will come in handy. Many people don't worry about their credit score until it's too late. A bad credit score can have a serious effect on your financial health. Your credit score influences many financial decisions, so you must keep it on track. Simply keeping up with your payments and maintaining a strong credit history can make a major difference in your life.